Thank you, everybody, for remaining with us. We're coming to the end of day 2 and indeed the end of the show. Thank you for all the people who've stayed on here in London and obviously people joining us online as well. Really appreciate your attendance and your interaction with the sessions that we've had so far. Now, to wrap things up today, we're going to be talking about financial services. And joining me are Maxim, who you might remember from a session earlier on. He is the Chief Digital Strategy and Innovation Officer at MSU Federal Credit Union. Next to him, we have Amelie Doublet, Legal Counsel at Convera, and Alex Perko, Strategic Partnerships Director at Minka. Now, I'll let them explain a little bit more about their companies and what they do. Well, please welcome them to the stage. Okay, actually, that's probably a good idea, a good place to start. So, Ben, why don't you give us a quick overview of your role and obviously the company?
Sure. Absolutely. So I work at the 43rd largest credit union in the United States. We're based in Michigan. I have been there for 16 years in different tech roles, really all in the kind of realm of digital or product. Most recently in a leading innovation and a formal innovation program. We run an innovation lab called the lab at MSFCU.
Amelie.
So I am part of the legal team for Convera. So for those of you who might not be familiar with Convera, we are a fintech which specializes in FX payment services and hedging products. We were actually part of the Western Union group for a number of years, and we recently separated from Western Union to kind of take on a life of our own. So it's been a very interesting journey as legal counsel for Convera over the past year, especially because we have applied for licenses in Luxembourg to operate our EEA activities. And that has been a great opportunity to really see not only how the Luxembourg regulator, but a number of other regulators in countries where we've developed branches or passported. So, you know, the French regulator, the German regulator, the Italian regulator, et cetera, how they are really seeing and embracing the development of new businesses and innovative payment actors. It's been a really great experience.
And I'm Alex Perko. I'm one of the growth leads at Minka. Minka is a South American, Colombian-based company, and we built the first real-time payments network in Colombia, and we're now expanding across Latin America. And it's my job to take the expansion further afield into the likes of Africa and other parts of the world that typically have problems with their existing payment infrastructures. We're there to improve it, bring in real-time payments, and all the great things that fintechs can do on the back of real-time payments and improved infrastructure, which is built as a foundational layer. So my job is to do that. Background is really business development, financial services, and banking for about 8 years.
Okay, perfect. Now, we're going to start off with a really small question, which is what are the key technological innovations that will have the most significant impact on the fintech industry in the coming years? Now, we could have had a whole day dedicated to this, I'm sure, but I'd be interested to hear your thoughts. And Alex, we'll start with you.
Well, I mean, the way I'd approach this question is there are thousands of people in this room, metaphorically speaking, that can answer this question better than me in terms of experts in the field of certain fintech innovations, such as blockchain, and we've heard about AI a few times today and yesterday. I think the most important thing, fundamentally, is that we get the basic first principles right, and we look at the foundational layers to allow the fintech innovations to thrive. Because without the foundational layers being built properly, and I'm speaking from the perspective not just the payments plumbing, which we do, but also the regulatory, the political, and the technical as well side of things. Without those being aligned regionally or globally, then the chance of a fintech innovation that could be blockchain-based or AI-based or any other form of data tech, for example, thriving and having the biggest impact on more people is more limiting. So I think the most important thing isn't necessarily the technology itself, because there'll always be technology coming forward as in life, you know, and more so as time moves forward. But I think without the foundations being built correctly in all areas, we're going to struggle to see the real impact of those technologies on a sort of global or regional basis.
Yeah,
that's the important thing as far as, from my perspective anyway.
Yeah, that makes sense. Amelie, I see you nodding away there. Do you want to add an extra layer on top there?
Sure, no, I absolutely agree. I think it's about getting the foundations right and asking yourself not necessarily what is the most performant technology, but what is a technology, whether that's an emerging technology or perhaps an existing one, and even one that's been around for decades, that is going to give the best customer experience? Because ultimately, I think as financial service providers, that always has to be the key focus. And really, from my perspective, one key trend that we've been seeing, which is in big part due to digital innovation, is a lot more empowerment of customers. Whether that's because they have access to a lot more service providers with new actors such as e-money providers, crypto service providers, and so on, or whether that's because they have a greater choice of services. And the greater choice of services is in big part due to digital technology, to things like very powerful APIs, which are able to embed microservices within each other. For example, now when we shop online, we have buy now, pay later, which is incorporated in many, many shopping platforms. That's a microservice that's working through partnerships and APIs. And all of that is giving customers really a much greater, more sophisticated and customized experience where they can pick and choose. And if you combine that with technologies like AI, which are really giving customers the ability to get access to their data, because now you have providers like account information service providers, and then AI, which is able to exploit this data and give customers a very structured overview of all of their financial data, that is really giving the power back to them to make their own economic and financial choices and journey.
Yeah, maybe just to add to what's already been said, it's really about, and maybe going back to the last presentation, the last question there, it isn't just about the tech enables, the innovation, but, to the point Alex made as well, those layers need to be there. Banks, credit unions, we all have a very old legacy technology. They don't talk together. The systems have been hacked together for years to try to make them work. And some of the successful fintechs have been hacking together things that just supplement what should have already been inherently built into the technology. So they're focused on fixing a problem that should have never been there instead of focusing on innovating. And some of the technologies and why everyone's so excited about ChatGPT is the people who are on the business side are able to do stuff quicker that they weren't able to do on their own. They don't have to wait for their IT team or their development shop to create something for them. They just go do it, and ChatGPT creates it for them. Same thing with a lot of the no-code, low-code stuff that's out there. That enables the business to take an idea and just put it out and try it. And that's really when you get power, when you're not being led by your technology organization as a financial institution, when your business units, your business people are leading, that's where the true innovation is going to come, and it's going to really be more on that product side. And people tend to kind of say, oh, well, that's complicated and scary. Let's have my CIO, CTO figure it out. No, you figure it out, and then they'll help figure out how to make it happen. So there really needs to be that focus for all of us in this room to help push forward, on how do we get the business team enabled at your organization.
Okay, thanks, Ben. Amelie, maybe you can look here at how the relationship between traditional financial institutions and fintech startups, how that will change over time. How do you see it evolving, and what's the implications for the industry as a whole?
So I think we've been already seeing an evolution in this respect, and there's a lot of talk of, fintechs coming as a big competition to traditional banks and perhaps pushing banks out. I actually don't think that it is going to happen anytime soon, personally. Banks have been around, since the Medici banking system, and they are still around because it's a system that has worked. What we are seeing is that, first of all, from a regulatory standpoint, the legislator and regulators are trying to create much more of a level playing field. So we had the Second Payment Services Directive that came into force a few years ago that already tried to accelerate this level playing field. And now we have the Payment Services Directive 3, which is on its way toward adoption, which is going to further strengthen this by doing things like giving fintechs and payment institutions access to settlement systems, to payment systems, ensuring that new emerging tech companies can access bank accounts without any hurdles or de-riskings on the part of banks. So I think once that level playing field is really truly in place, we can start really building partnerships between banks and fintechs. I think banks absolutely have inherent assets. They have a historical customer bases, they have very strong balance sheets, they have a lot of customer data, they have trust, they have government backing in many cases. There's the too big to fail notion, right? And that in turn further generates trust. So I think there's definitely room for both banks and newer payment institutions, but a key part of that will be relying on partnerships and for banks to perhaps embrace the fact that they are not necessarily always the experts on a certain product, and that in some cases, the best option might be to collaborate with a newer tech actor that can be the expert on a specific part of the service that they then deliver in a seamless way to the consumer.
Alex, do you agree? Do they need each other?
Yeah, I do agree with you. And I think there's two words, I think, to add to what you were saying. I think it's evolving collaboration. I think there's always going to be collaboration. There always has been collaboration from the dawn of time, since the dawn of financial services. You mentioned Medici, and you go back to the beginnings of time when, wax tablets and Paris was used as a ledger, and, double entry bookkeeping began and all that sort of, that from those hundreds of years ago. I think collaboration is evolving, and it will continue to evolve over the years. But I think we have to draw a distinction between what's happening in the developed world and also the developing world, because the roles of both the legacy financial institutions, call them that, and the fintechs is slightly different. In this part of the world, in London and other parts of the developing world, there's much stronger regulations, much more complex financial layered infrastructure, which has to be sort of pulled apart and taped together and to create new innovation, which is much more complex and difficult. And of course, politically, it's much more complex in many ways as well. That's probably debatable. Whereas in the developing world, we found in our experience from Minka, we built the real-time payments in Colombia, and we didn't have to sort of rely upon cutting through those layers as extensively as perhaps we would have done in Europe, for example, or the US. We could leapfrog the old technology effectively and build very quickly on top, and it's more of a greenfield environment. So I think in the developing world, it's slightly easier in some ways, but I think moving forward, I think the stakes are getting higher and higher, because as things do develop into a more of a global environment in terms of as mentioned before, the benefits of fintech and financial services for people and improving humanity and providing solutions to complex problems. I think as the world becomes more globalized, I think the stakes become higher, and there's an even greater need. So, for example, moving from open banking to open finance to banking as a service through to open data and portable data, all these things are moving in the right direction, but it means that the stakes are higher in terms of choosing the right organizations to work together to make sure there's no risk to the collaborators or to the customers ultimately. So I think it'll be an evolving collaboration, as mentioned at the beginning, and I think it's one that's essential, as Amelie mentioned, in terms of this trust that banks have in many parts of the world. Many there's no trust, but we can think of some examples in South America, for example, but they're probably outliers. Generally, there are huge trust that's tied to the legacy financial institutions, but fintechs bring that ability to be nimble and to move quickly every quarter, every week, every day, instead of every year, making those changes. So I think it's a really nice collaboration, which will continue and expand as time moves forward, I think.
Yeah, and Ben, that's something that you're already doing, isn't it? Collaborating with dozens of different fintechs to give you that agility and the specialization that you're looking for. So give us some benefit of your experience there.
Yeah, absolutely. So, we've chosen, as a smaller financial institution, when I started at the credit union 16 years ago, we were 1.7 billion in assets. We're almost 8 now. But we got there by doing a lot of these partnerships. And we've been able to punch above our weight class by having these partnerships and working with people that have the experience in industry. And some of them are people that used to work at very big banks, card providers like Visa, and they've broken off and they really wanted to solve this one thing, and they're very passionate about it. And we tap into that and we work and add to it. And even with, we think of the startups when we think of fintech, but companies like Visa and the banking cores and some of the other like true system providers, we've tried to take an approach too of, hey, even like our ATM providers and all, like if they're not working and not working well, we can't run and operate as a business. So we work with them, we partner with them, we meet and sit down with their executive teams as often as they'll listen to us. We try to do at least one on-site with our major partners there and turn these vendor solutions into actual partnerships, and we offer to test things and try things out, and that really helped us kind of get a leg up there. I think maybe to answer some of the question where this goes, a lot of what's happened, at least in the U.S. and some of the developing markets, there's so much of the revenue stream that comes from Visa or card interchange, right? And a lot of the developing markets don't have that. I was in India early in the year, and a lot of the payments there are just payment apps and QR codes, trying to bypass that because the merchants don't want to pay. this. In the US, we have very good lobbyists spending millions and billions of dollars to try to make it so those fees go away for them, but then who's going to pay for the fraud? Not them. What happens? So do we just stop facilitating payment between things? And a lot of the innovation in embedded finance is just basically putting your card in the background of something. So yeah, so Uber, someone said earlier, Uber made it feel like you're not paying for anything, but there's still a credit card in the background of that transaction. What is the next thing? And is it the real-time payments rails that are also, again, lots of red tape and have taken forever to get off the ground in the US and are only just launching now. You know, when they could have launched maybe 5 years ago if there wasn't some of that regulatory hoops, whatever, people not wanting to work together.
Yeah, I completely agree there. Alex, what are, in your view, the key areas for fintech firms? What should they be focusing on to address customer needs and improve the user experience?
I think, as mentioned before, the whole point about technological improvements is, I like to take things back to the fundamentals and the first principles. So why were you doing something in the first? What's the point of an innovation? It's to help the customer, it's to help the human condition, to help move things forward and to help solve complex problems. So I think, you know, that for me is the most important thing. It's not necessarily the service that the fintech is offering. It's why we're offering that in the first place. You know, we went to, for example, to Colombia initially 5 years ago and opened up the first real-time payments down there. And, you know, we were in a situation where the environment there was very cash-heavy, very cash-focused. But there's a reason for that, because it wasn't just because people liked cash. It's because they thought cash was anonymous and it worked for them, and they were very rural environments and everything else. So we had to go back to the basics and see what was the incentive, what was the convenience factor we could bring to that market in the first place to, you know, to circumvent that sort of intransience and that lack of traction. And it took a long time to get there. So I think going back to what we were saying earlier on about finding the real reason for a solution is the most important thing as far as I'm concerned, and then building a solution around that. And then with all the right pieces in place in terms of the foundations, there's a chance for it to thrive. And actually over the last 5 years, that's happened in Colombia, and that's happening in other parts of the world too. So it's going back to the basics again and looking, it sounds very esoteric, but going back to what we were saying earlier about why are we doing something, what's the purpose of the solution we're bringing? Is it just to make money, or is it because we're going to solve a complex problem and advance humanity? And I think financial services is a technology made up of other technologies such as, you know, information technology, communications, energy technology, which all fall into the same area of advancing the human condition and solving problems. And if we focus on that, anything we bring to market, be it in the developed world or the developing world, will serve a really strong purpose and have more chance of success, I think. If that makes sense.
Yeah, no, it makes perfect sense. Amelie, do you agree?
No, I completely agree with that. And to go back to what I was saying earlier about empowering customers and ensuring more inclusivity, I think inclusivity goes with empowerment, and is a huge part of today's, the progress that we are making but still have to continue to make in the financial services area. You know, still today, about half of the world population almost still does not have access to a bank account or to basic financial services. And there is still huge room for facilitating that ability for these people to get on board and have not necessarily a traditional bank account, but have some access to payment services. And I really think that the wider range of actors that we're starting to see emerge can play a huge role in that, in going towards that direction. And also the seamlessness and the ease with which now you can access financial services. So we're lucky in the UK, in the EU, to be able to now access, in some cases, you can open a payment account in just minutes, whereas before that required you to go to a physical agency, to have proof of domicile, etc. And so this is, I think, the trend that I'm hoping to really continue to see grow, and for financial service providers to really focus on, so this empowerment and this inclusivity. And
we were just talking backstage, and you know, you were speaking about covering the EMEA region. You talked there about here in the UK, for instance, we're lucky, if you like, because we have that access and we can set up an account in minutes. What other countries or regions, from your experience or your knowledge, have a bigger challenge ahead in terms of getting to a level where I don't know what I'm trying to say here, how can they be raised up to a similar kind of level that we're experiencing here in the UK?
Yeah. Absolutely. I think, Alex, actually, you have experience at your company dealing with regions in Africa and so on, and perhaps you're better placed to address that.
Yeah, I think the question is, perhaps the reason behind the question, is the UK, is there a need to bring the UK up to the same level as the European Union or the US, for example? Or what are the main problems we're trying to tackle in the UK? I think earlier today someone mentioned in a different presentation the fact that, and it tends to get forgotten about, for example, in the UK, there is an unbanked population in the UK. So there is a problem, obviously, across Europe and the US of an unbanked population. I'm not sure the figures, but it's sizable, millions of people. Now, my job is to work across the developing world, which is Africa and Latin America and other parts of the world, which require, for example, real-time payments or other financial services. So you tend to forget that within the UK, where I'm principally based, there's a big problem here as well. It gets overlooked to many, especially in a room like this, as mentioned earlier on today. So yeah, so I think, as Amelie said, in relation to Africa, the problems are very different. Of course, and within Africa, the problems are different between countries. The cultures are all very different, and the problems between West Africa and Anglophone Africa in the East is very different. And South Africa is different again, and of course the solutions therefore are different. So in Africa, you have much more in the way of the mobile network operators, the MNOs. They're much bigger than in many parts of Africa than the banks, the central banks, in terms of their power and the ability for the MNOs to provide financial services and every other service you can think of linked to that for the rural communities is unbelievable. So that's a much different environment to Europe, of course. That doesn't never happen in Europe. And Latin America is kind of between the two. So every region is different. UK and Europe are broadly the same in terms of the ability to access open banking and because of PSD2 and all the rest of it. And of course, in other parts of the world, open banking is there as well, such as in Mexico and in Brazil, Colombia with Minka, a small open banking example, and parts of Africa, South Africa and Kenya, for example. They've got their own little versions. But I like to go back to the basics again and say, what's the main problem we're trying to solve? And I think the US, UK, and Europe, EU, principally have got the majority of the problems solved, but there are pockets still which need to be addressed, whereas Africa and the other parts of the developing world, there are much bigger problems on a broader scale, which we're addressing.
Yeah, absolutely. Let's talk about regulation. Ben, I'll ask you this question first. How should fintechs navigate what is a complex regulatory environment, certainly in developed economies, and what role can policymakers play in shaping the industry's future?
Yeah, absolutely. So honestly, this is where that partnership comes in the other way, right? So we all often think, oh, I want a partner, they got all the tech, they got all the stuff. Well, we bring something to the table. That's understanding and being able to navigate what do we have to go through, what is our compliance. So we've invested in about 20-some companies that are fintechs, and we're often their first client, first experience working with a financial institution. We have regulators, we have examiners, we have auditors, and we have certain requirements that we have to meet, especially around data privacy and other things. And some of them get it, and they're like, oh, yeah, tell me more. I want to figure out how we work together. And others we end up not working with because they just are like, no, I'm just going to do my tech thing. So really, and then they're not a good partner, and they're not acting as a partner, so it's not a good relationship. So yeah, there's a lot that needs to happen. Usually what we try to do and encourage them to do is have some sort of, there are different certifications depending where you're at, what region, what's looked for. In the US, typically it's a SOC 2 certification that says, hey, I'm going to do this with your data, and it's all secure. And that's like the easy gold stamp of approval. You can check the box for the risk team and move on. If they don't have that, which most fintech startups do not have, you work with them and figure out, did they do any sort of third-party audit? Has anyone else looked at their code practices, and can they document that someone did this stuff? And if they hadn't, we tend to do things when part of the reason we have the innovation lab is to put some solutions in and try them before we want to go through all this work anyway. So if they're connecting through an aggregator like Plaid, that's now our member, our customer, directly engaging with them. We're in the transaction because we recommended, but we're not the one giving the data, so that kind of helps us avoid the regulatory pressure on our side, but it allows us to still test something while we're working with them and teaching them what we need them to be in order to do a full-scale launch maybe 10 months later.
Yeah, I completely agree with the fact that sometimes vendors can be absolute tech experts and be brilliant at the technological delivery of our solutions, but that I do sometimes see a gap between this tech world and the regulatory world, especially because you do have to take into account that often vendors are not just servicing regulated financial service providers, right? We're servicing corporates, they're servicing a wide range of industries. And so when we as financial service providers who are heavily regulated in a number of jurisdictions come to them with our list, extensive list of regulatory requirements, sometimes there's a bit of a misalignment. So I think absolutely finding the right partner, a partner who is at least willing to work with us is very important. I think just being very organized for companies, very prepared, bringing in the regulatory consideration at an early stage is important. Currently at Convera, we're working on a digital onboarding project, for instance, and that is obviously very complex from a regulatory standpoint because it's a global project. So that means that you have the American regulations, you have APAC, you have the UK, you have the EU, and then within the EU, you can imagine each country sometimes has its own requirements because although there's a lot of harmonization in the EU, there's some topics such as anti-money laundering, which are minimum harmonization and which each country, each member state still has a lot of sovereignty in imposing specific requirements. So that's really a puzzle of regulatory requirements. And so it's really important to tackle it from the start and not leave it until a bit later. In terms of the role of the legislator and of regulators, I think the question around legislators is how much should things be regulated? And this is a topic that we could discuss for an entire separate panel, but the relationship, striking the balance between regulation and deregulation. Deregulation in the sense perhaps of placing trust on companies, on actors to reach the desired result rather than being overly prescriptive. And in terms of regulators, they have a huge role to play. And we've seen it in Luxembourg with the Luxembourg regulator. And it's been very nice because they're extremely open to dialogue and to discussing and really understanding our business model. And that, I think, is something we see with innovative models. In the UK, there are, for example, regulatory sandboxes. That's the case in a number of other jurisdictions. And that is great for fintech actors who can kind of test their ideas in a safe environment without fear of non-compliance. So I think definitely the legislator and regulators have a very big role to play in this.
They've got a huge role to play in it, and it's really the most complicated thing when it comes to anything that's involving cross-border or international technologies, I would say. I like the idea about regulating and deregulating, especially the deregulating part, which sounds particularly exciting. But I'd say, and I hate to sound esoteric again, but I will say this. I'd say when it comes to regulations, from my perspective, I think we have to define what regulations are. I can draw an analogy, if you'll permit me, in that regulations really fall back to a set of values. So a country's regulations will reflect a country's values, and the values are determined by the people. So values lead to regulations, which is why it's so complicated, because if you're looking at rolling out technology across a number of borders, you're going to come across up to the buffers every time because there are different values which are butting each other. So, for example, the analogy is, if you wish to enter a country, sometimes you need a visa to enter that country, and that country's rules around the visas determine who comes into the country and who doesn't. It's kind of the same for money. Money is basically information, yet information, we'll expect information to flow freely, like on WhatsApp, for example, but money doesn't flow that way, but it's still information. Why is that? Because the regulations of a country and the languages they speak are different, and it causes a lack of communication, and like a visa, it gets stopped at the border. So, for example, we were looking at doing or working on a number of cross-border initiatives in South America and in Africa and in the Caribbean, which is even more complex, considering it's such a small area. But because of all the different political regimes, human egos, you could say, and politics is terribly complex in itself, which leads to regulations based on the values, like I said, it's very hard to get something rolled out beyond a domestic or a smaller region, like cross-border payments, for example, incredibly complicated. So there's a scheme which you might have heard of called PAPS in Africa, which is a cross-transnational payments protocol and program, which has been going for a couple of years now. And it's starting to get traction now, but it's taken years and years. And even now, it's just picking up traction slowly. So, in the lots of, I did similar examples. There are other examples which have been successful in smaller sort of payment corridors, for example, between one or two countries. But any more than that, it becomes incredibly complicated. So regulations, I'm afraid, because like humans, they're complicated. technology can solve for anything. When it comes to regulations and politics, it's a whole different ball game. And then it's down to the convenience and the value of free information and free money moving freely greater than the value of stopping it at a border for the safety of the country's inhabitants, for example. It's a very deep, sort of complex way of thinking about it, maybe, but yeah, that's the way I see it.
And as this is the last session, I just want to get each of yours view. Again, we've been looking into the future a little bit here. What are your hopes and expectations for FinTech and financial services on a broader level over the next few years? You know, we've seen a considerable amount of disruption and change just over the last 3 years. Where do you think we're going to be in 3 years' time, or where do you expect or hope we will be? Ben, starting with you.
Well, we're all just going to work for ChatGPT, and then, you know, that'll be it, right? That's the easy answer. But no, really, you know, there's going to be more collaboration. There's more groups getting together. You know, in the credit union industry in North America, we were one of the first to do some of the stuff we're doing and talk about it. But then as we talked about it and told the story of what we were doing, more like, oh yeah, we were doing this and doing that. And they're all kind of little pockets. And now we're starting to get together and collaborate as like industry groups. And the more we've done that, we've also been able to engage our regulators and bring them in and like start to teach them about what we're trying to do and why we're lobbying for these certain things that they're, you know, potentially considering and how they affect us. You know, so by engaging government, by engaging regulation, by engaging each other, and then really figuring out, you know, what are the gaps and how can we collaborate? And again, if we're smaller institutions, maybe 3 or 4 of us can get together and work with one company to give them the scale they need to actually build something bigger. You know, because I think a lot of what happens is the VC market dries up, a bunch of people die off in the FinTech world, and then we have to wait for the next wave to maybe get some bigger innovations as well.
Amelie?
From a very regulatory practitioner standpoint, I'm looking forward over the next couple of years to seeing how the European Commission's current legislative initiatives pan out and are rolled out. So there's a lot in the pipeline, and it's really quite an interesting and exciting time. So we got the Third Payment Services Directive, which, as I was saying, is really looking to enhance the level playing fields between banks and fintechs. We have the Financial Data Act, which is, for those of you who may not be familiar with it, an act which is essentially going to take open banking and extend it to open finance. So with access to data for accounts other than payment accounts and other types of financial services. And there's a number of other initiatives in the pipeline, and I'm really looking forward to seeing how that plays out, how it's implemented, how it's received by the market, and most importantly, how it's used, and to really, again, create this climate of any ecosystem where there's an empowerment of customers and empowerment of companies as well. And yeah, I'm looking forward to seeing what happens next.
I think the big question is, if AI doesn't kill us all, then we're in with a chance of something special happening. But I really don't know what's going to happen in the future, because I'd be forced to say, for me to say otherwise, because it can go one of two ways. It can either be, things can become more global to a sense, or they become less global. If you go for the populist route, it's less global. Otherwise, it's more global, and things become more interoperable and joined up. But I don't know whether that's going to happen because of the struggles we're seeing at the moment in Africa and Latin America, and even the open banking in Europe, who PSD2 hasn't worked out like we thought it would work out. Now, anything can be, like I said before, anything can be resolved technically, but politically and in terms of regulations, it's much more complicated. And maybe we have to come to like a midway, where we abstract away the detail, like we did in Latin America and in Colombia. We abstract the detail away, and we have the overall guiding principle that leads to a solution, for example, in payments or whatever else the outcome might be. And the details are left to the individual regulating authorities, countries in this case, or central banks, to work on the details from themselves. We allow more passage of information, for example, to travel and a more broad building of an infrastructure globally to allow for better outcomes for people, maybe. So let's have a midway solution. But I think I think it's the case of reviewing, continuing to review where we are to try and come to a new solution, because I can't see how it's going to work out in the next 5-10 years, and it's impossible to predict, I think. I don't know. It depends on the AI, I suppose, like I said at the beginning, but we'll see.
Well, yeah, exactly. You know, a year ago, we weren't talking about generative AI. We weren't talking about ChatGPT. It wasn't on anybody's radar, really.
Like Moore's law, it just keeps on changing.
Absolutely, absolutely. That's what makes it so exciting, right? That's
Exactly.
what we're supposed to say.
Exactly.
Okay, that brings this session to an end. Big thank you to Ben, Amelia, and to Alex. Thank you, guys. Thank you.